Can you actually invest in crypto in India legally, or will you get in trouble for it?
Short answer, yes, it's legal.
But there's one rule almost every beginner misses, and skipping it can cost you real money. In this video, I'm going to show you exactly how to invest in crypto in India in 2026, step by step, including the exchanges to use, the tax rules nobody explains properly, and the mistakes that get beginners in trouble. No jargon, no confusion. Let's get into it. First, let's clear up the confusion. Yes, you can legally buy, sell, and hold crypto in India. But here's the catch, it is not legal tender. That means you cannot pay your rent with Bitcoin, you can't pay for your groceries with it, or settle a bill with it. It's treated purely as an investment, like gold or shares in a company, not as money. The government actually has an official name for it. They call it a virtual digital asset, or VDA for short. You'll see that term again when we talk about taxes, so remember it. There's also no single dedicated crypto law in India yet. Instead, it's regulated through a mix of tax rules, anti money laundering laws, and a registration system for exchanges. We'll break all of that down in a second. Think of it like owning a rare painting. You can buy it, sell it, and profit from it, but you can't walk into a shop and pay for your groceries with it. Here's the part that trips up almost every beginner: taxes. In India, any profit you make from crypto is taxed at a flat 30%. It doesn't matter if you're a small investor putting in a few thousand rupees or a big trader, everyone pays the same rate. On top of that, there's something called TDS, tax deducted at source. 1% gets automatically deducted on transactions above 10,000 rupees. You don't have to do anything for this. The exchange handles it for you automatically. Now, here's the part that really surprises people. You cannot offset your losses. So, if you lose money on one coin and gain money on another, you can't cancel them out like you can with stocks. Each gain is taxed on its own. Let's make this real. Say you invest 10,000 rupees and it grows to 15,000. Your profit is 5,000 rupees. You'll pay 30% tax on that profit. That's 1,500 rupees straight to tax. So you actually walk away with 3,500 rupees of profit, not 5,000. And when tax season comes, you'll report all of this under something called Schedule VDA in your income tax return, specifically ITR 2 or ITR 3. Alright, let's actually do this. Here's exactly how to start, step by step. Step 1: choose a registered exchange. In India, only use platforms that are registered with FIU-IND, that's the Financial Intelligence Unit of India. You can check the official up to date list at fiuindia.gov.in since new platforms get added and this can change. As an example, CoinDCX is one of the more well known FIU registered spot exchanges, meaning it's built for beginners who just want to buy and hold crypto. This isn't a sponsorship, just an example so you know what to search for. One thing worth flagging, you'll also come across Delta Exchange India. It's FIU registered too, but it's built around derivatives, futures, options, and leveraged contracts, not simple buy and hold. It does have a small spot section, but that's not really what the platform is designed for. That's a much higher risk, more advanced product. So I wouldn't touch that until you've understood the basics on a spot exchange first. Not financial advice. Always double check a platform's current registration status yourself before depositing any money. Step 2: complete your KYC or Know Your Customer verification. You'll need your PN card, your Aadhaar card, and usually a quick video verification. No exchange in India will let you trade without this. It's mandatory. Step 3: add money. You can use UPI, IMPS, or RTGS to deposit rupees into your exchange account. And here's some good news for beginners. Most platforms let you start with as little as 500 rupees. You don't need a huge amount to get going. Step 4: buy your first coin. A lot of beginners start with something like Bitcoin or Ethereum just because they're well established. Quick disclaimer, that's not financial advice, just what's common. When you make the purchase, remember that 1% TDS gets deducted automatically. Step 5: track everything. Keep a simple log: the date, which coin, how much in rupees, any fees, and the TDS that was deducted. A basic spreadsheet works perfectly fine. Trust me, doing this now saves you a massive headache later. And step 6, when tax season comes, report everything under Schedule VDA in your ITR2 or ITR3 form. If you're not confident doing this yourself, it's worth a quick consultation with a CA. A mistake here can mean penalties. Now, quickly, who's actually regulating all this? Three main players. First, the RBI, the Reserve Bank of India. They don't recognize crypto as currency at all. Instead, they are pushing their own digital currency called the digital rupee. That one actually is legal tender. Second, SEBI, the Securities and Exchange Board of India. They focus on investor protection, making sure platforms are honest about risks and don't mislead people with advertising. And third, FIU-IND, the Financial Intelligence Unit. They make sure exchanges are doing proper KYC, monitoring transactions, and reporting anything suspicious. So think of it like this: the RBI doesn't want you using crypto as money, SEBI wants the platforms to play fair, and FIUIND wants to make sure nobody's laundering money through it. Before you go do this yourself, let me save you from the mistakes I see beginners make over and over. 1. Using an exchange without checking if it's actually FIU registered. Right now, some platform status changes over time, so what was fine a year ago might not be today. Always check the current list before depositing money. 2. Not tracking your transactions and then panicking when tax season hits. 3. Assuming your losses will cancel out your gains. In India, they don't. 4. Not checking if a platform is actually registered with FIUIND before using it. And 5. Treating crypto like a payment method. It isn't one, it's an investment. Before we talk about whether you should invest at all, let me give you two habits that genuinely lower your risk no matter what you decide. First one, the allocation. A common rule of thumb is to keep crypto to a small slice of your overall portfolio. Like a lot of people use something like 5 to 10%, with the rest in things like stocks, mutual funds, or fixed deposits. So if you have 1 lakh rupees to invest overall, that might mean 5 to 10,000 rupees in crypto, not the whole amount. That way, if crypto has a great year, your overall portfolio benefits. But if it has a terrible year, your financial life isn't wrecked. Second, how you invest it. Instead of putting in one large lump sum and hoping you timed it right, a lot of people use something called a SIP, a systematic investment plan. That just means investing a small fixed amount on a regular schedule, say 500 rupees every week, instead of all at once. Some Indian exchanges even let you automate this. The idea is simple: you buy a little when prices are high and a little when prices are low, so your average cost smooths out over time. It won't guarantee a profit, but it takes the guesswork and the stress of timing the market out of the equation. So, should you even invest in crypto? I'm not going to tell you yes or no, because that's genuinely your call. But here's what's true: crypto in India is a high risk, heavily taxed asset class, arguably one of the most heavily taxed anywhere in the world. Prices can swing a lot, sometimes in a single day. If you do decide to invest, stick to the allocation and SIP habits we just talked about, and only ever put in money you can genuinely afford to lose. This video is meant to educate you, not to tell you what to do with your money. If you're serious about investing, it's worth talking to a financial advisor about what makes sense for your specific situation. So that's the real no fluff way to start investing in crypto in India. Pick a registered exchange, complete your KYC, understand that 30% tax rule, and keep good records from day one. I want to hear from you. Are you already invested in crypto, or is this your first time even considering it? Drop a comment below and let me know where you're starting from: beginner, existing investor, or just here to learn. I read these and it genuinely helps me figure out what to cover in future videos. See you in the next video.